Good morning. The S&P 500 index closed slightly lower and the Nasdaq index advanced modestly on Wednesday as investor reactions were muted after the US Federal Reserve kept interest rates unchanged as widely expected and gave little indication when borrowing costs might fall again. At the close of trade on Wall Street on Wednesday, the Dow Jones index rose by 12 points and the Nasdaq index added 40 points or 0.2%. The broader S&P 500 index closed slightly lower after briefly topping 7,000 points for the first time. The US Federal Reserve held interest rates steady on Wednesday, citing still elevated inflation alongside solid economic growth and giving little indication in its latest policy statement of when borrowing costs might fall again. Economic activity has been expanding at a solid pace, Fed policymakers said in the statement, after voting 10-2 to hold the US Central Bank's benchmark interest rate in the 3.5 to 3.75% range following a two-day meeting. Both Governor Christopher Waller, a contender to replace Fed Chair Jerome Powell when his term as central bank chief ends in May, and Governor Stephen Miron, on leave from his job as an economic advisor at the White House, dissented in favour of a quarter percentage point rate cut. The US economy expanded at a solid pace last year and is coming into 2026 on a firm footing, US Federal Reserve Chair Jerome Powell said during his press conference. Powell added monetary policy is not on a preset course and we will make our decisions on a meeting-by-meeting basis, said Powell. The US Federal Reserve's decision to leave rates steady sent stocks and bonds wavering, with Jerome Powell refraining from signalling any imminent resumption of rate cuts amid a solid economy. The US dollar rose as US Treasury Secretary Scott Bessent touted a strong currency. Sectoral performance on the S&P 500 index was mixed on Wednesday, with energy shares leading gains up 0.7% as oil prices hovered around 4-month highs on Iranian supply concerns. Real estate stocks were amongst the worst performers, down 0.9%. Atop the S&P 500 index, storage infrastructure stock Seagate Technology jumped 19.1% after it forecast third quarter revenue and profit above Wall Street expectations, benefiting from strong demand for its data storage devices as enterprises scale up their use of artificial intelligence. Rival Western Digital jumped 10.7%. Elsewhere, South Korean chipmaker SK Hynix, a key Nvidia supplier, reported a record quarterly profit, and Dutch chip equipment maker ASML booked its highest ever fourth quarter orders, igniting a tech rally from Europe to Asia. Boosting chip sentiment further, China has given approval to ByteDance, Alibaba and Tencent to buy Nvidia's H200 AI chips, Reuters reported on Wednesday. Nvidia climbed 1.6%, Intel jumped 11%, while Micron Technology gained over 6%. The Philadelphia Semiconductor Index rose 2.3%. Texas Instruments surged 9.9% after the analog chipmaker forecast first quarter revenue and profit above Wall Street estimates, betting on robust demand for its analog chips from booming AI data center expansions, sending its shares up in extended trading. Carvana shares shed 14.2% after short seller Gotham City Research released a critical report alleging accounting issues and inflated earnings. After the bell, Meta shares rose almost 5% on a stronger than expected revenue forecast. Meta said it expects first quarter sales to come in the range of $53.5 billion to $56.5 billion US dollars, ahead of analyst estimates for $51.4 billion US dollars. Microsoft shares slipped over 3% in extended trading on Wednesday after the software maker posted slowing cloud growth. Tesla reported better than expected fourth quarter results after the bell on Wednesday, but revenue for the year dropped 3%, the first time on record the company has recorded an annual decline. The stock rose about 3% in extended trading. US government bond yields advanced on Wednesday after the US Federal Reserve left interest rates steady as widely expected and noted inflation remained elevated and the labour market continued to stabilise. Treasuries offered a muted reaction to Fed Chair Jerome Powell's press conference, with Powell failing to provide any insights into the central bank's policy path deeper into 2026. Chair Powell has just two more meetings before his term at the helm ends. US futures markets are pricing in at most 2 rate reductions in 2026 and none in 2027, regardless of the next Fed chair. Prediction markets are pointing to BlackRock bond chief Rick Rieder as the likely candidate to succeed Powell. Following the Fed statement, US rate futures priced in about 46 basis points of monetary easing or fewer than 2 25 basis point rate cuts for 2026. That was down from about 53 basis points 2 weeks ago. Elsewhere, the Bank of Canada held its policy rate at 2.25% as widely expected. The The US 10-year Treasury yield rose by 2 points to 4.25%, and the US 2-year Treasury yield increased 1 point to 3.58%. In commodity markets, global oil prices rose to the highest since late September on Wednesday on looming Iran concerns, while a weak US dollar lent further support. The US Energy Information Administration said the country's crude oil inventories fell by 2.3 million barrels to 423.8 million barrels in the week ended January 23, compared with analyst expectations in a poll for a 1.8 million barrel rise. The Brent crude price rose 1.2% to $68.40 US a barrel, and the US NYMEX crude price added 1.3% to $63.21 US a barrel. The Gulf futures price jumped $221 US or 4.3% to $5,303.60 US an ounce, hitting record highs propelled by economic and geopolitical uncertainty, while markets absorbed the US Federal Reserve's latest rate verdict. Spot gold was trading near $5,374 at the US close. Copper futures rose 1.1% and aluminium futures gained 1.7% after the US dollar slid to a 4-year low and speculative investors continued to pile in with bullish bets on industrial metals. Iron ore futures dipped 0.2% to $105.85 US a tonne on Wednesday as construction projects gradually halt in the run-up to the Chinese Lunar New Year, weighing down demand for steel and feedstocks. Australian shares are set to open modestly lower on Thursday, held back by a cautious session on Wall Street. According to latest SPI futures, the ASX 200 index is expected to open the day 4 points or less than 0.1% lower this morning, with gains in gold and energy stocks probably offset by a decline in the miners. Australian shares gave up early gains on Wednesday after data showing quarterly core inflation overshot forecasts, fueling bets for a near-term hike in interest rates. A key trim mean gauge of Australian core inflation rose by 0.9% in the December quarter, outpacing the 0.8% forecast and the Reserve Bank of Australia's hope for 0.75%, lifting the annual rate to 3.4%, well above the central bank's target band of 2 to 3%. Traders are now pricing in roughly over a 70% chance of a quarter-point hike in the 3.6% cash rate next week, compared to with nearly 60% before the data was released. In Australia on Thursday, international trade price indexes are scheduled, likely indicating the terms of trade has increased in the December quarter. In local company news, lithium miners Liontown Resources and Mineral Resources are expected to release quarterly updates. Elsewhere, Iluka Resources, Viva Energy Australia and Whitehaven Coal also issue sales and production reports. Main Pharma is hosting its annual general meeting today. Sweden's Riksbank is widely expected to leave the policy rate unchanged at 1.75% on Thursday. Stateside initial claims for state unemployment benefits are expected to rise to 205,000 last week from 200,000 previously. Factory orders and international trade data for November are also due. Apple is expected to report an 11.4% rise in quarterly revenue to a record $138.4 billion, driven by steady demand for the iPhone 17 series. Analysts and investors expect details on how the company plans to integrate Google's Gemini technology into its devices. The US dollar rose against a basket of currencies on Wednesday, rebounding from a 4-year low touched in the prior session after US Treasury Secretary Scott Bessent reaffirmed the United States' preference for a strong dollar. The Aussie dollar rose from 69.78 US cents to session highs near 70.35 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.